Hi guys.
Yep.
Yeah, thank you for the patience. Now, you see how price found it hard to take out this low.
Yeah.
Now, if you look at this whole thing too, consistently, you would agree with me that here is another sell to buy, right?
Yeah.
And this pretty much already tapped into the equilibrium pricing. You see now, you won't be surprised if price comes to just the open of this marketplace and then keeps flying. Or price has remained efficient. Can you see that?
Yeah.
And it just keeps going. Can you guys see?
Yeah.
Yeah.
It is not magic. It is what it is. Hope it makes sense now, everybody.
Yes.
Awesome. One thing I know for sure is if you can grasp and process and understand properly this whole thing, all you need to become filthy rich from Forex is to trade an hour, 2 hours daily. That's all.
What was that you say? Trade what? Sorry, didn't hear you.
Trade for 1 hour to 2 hours daily. That's more than enough.
Okay.
Yeah, just show up, trade for an hour or 2 hours, and that's all. Myself, I told you guys before, my trading hours is 5. I have just 5 hours that I use in trading. In those 5 hours, I can be present for 2 hours, I can be present for 3 hours, I can be present for 1 hour, but I am never present for 5 hours. But I know that is my trading window.
Is that because within 1, 2, 3 hours you meet your daily ROI and then your happiness call it a day?
Well, it's because I don't like trading.
Okay.
Yeah, I get tired of the whole thing, and you know, our trading style is a style that you have to monitor everything happening in the market and really understand the story, the language the market is speaking. Is that like somebody is talking to you now? If you're not listening to the person, you would miss what the person said, right? So if you want to respond later, then you'll be speaking rubbish. You can't relate. So that's how it is. So it's a trading. The trading style is pretty much exhausting. So that's why, and the reason for that is because it is complete. So you just have to have your defined trading time. Avoid over trading because you're going to get to that point of diminishing return where the whole thing starts getting low and low. You're like, oh, I missed this high. Oh, now I see it. No, you don't want to get to that point. Are we clear, everybody?
Yeah.
So you guys see why equilibrium is the only useful thing there. The others are bullshit. Unfortunately, most smart money traders just use premium and discount, and others that use equilibrium to mark their buy to sells. I see people use equilibrium to mark buy to sells, or they use equilibrium to mark a sponsored candle. Yeah, all those work sometimes, doesn't work sometimes. It's just coincidence. Shall we continue?
Were the sorry, Yusuf, were these trades valid? These on this screenshot?
What do you say?
Were these trades valid to you?
These trades, were they valid?
Yeah, to you.
On this screenshot, honestly speaking, I can't tell you if these trades were valid or not until we treat Algo market structure, because if I tell you that it is valid, you won't understand why.
Okay, no problem. Okay.
Okay, but they are valid.
Thank you.
So, but you won't understand why. So, but for the first part of it, you've understood based on premium and discount pricing and equilibrium. You've understood how the money got transferred from one structure point to another structure point. Sincerely speaking, this that I just talked about in terms of money transfer and the equilibrium thing, you guys, all of you here are the first set of people I have told in the community. Nobody. Nobody. I've been with it for a while. Intentionally, I did not want to share that yet because I was still working on it. But it was not complete. Up to now, it is not still complete because when I come out there, I want it to be completely complete such that you have those levels you can just limit, because that is where the next sell money or buy money is with confidence. Okay, but I'm just sharing it with you guys to give you guys an insight of what equilibrium pricing truly is. Okay.
Sure.
Even group B, when I got to this stage, I actually skipped this with them. So don't disappoint me. Make sure that you make use of it properly. Yep, let's go. Now we're going to one of those guys that I love so much. It's called the Algo market structure. Now, talking about types of transactions, we are going to skip this one. I'm actually removing it from the curriculum. Yeah, because you don't need it. You don't need it. Everything you need to know about supply and demand. This actually focused on supply and demand majorly, but everything you know about supply and demand, I already taught it. Okay, this SP transaction, I already taught you guys under liquidity. That has to do with those transactions that happen at the structural points, and that's where we have those execution orders and break-even orders. This DBD, drop-based drop, rally-based rally, whatever it is, they are completely useful and completely useless, depending on how the delivery is happening in the market. That's why the most important thing is for you to be able to build the story. Then irrespective of the structural transaction or the simple transaction, the range, all of both of them still falls under range transactions. And how I discovered all of these supply and demand levels and the ones that are useful and the ones that are not useful till I was able to refine it and everything, it was from this indicator called the volume profiler. Okay, so what am I saying? What I'm saying is this is old, it's no longer useful, as I've already taught you everything that is here. I already taught you guys. This was here because of, this was where Yusuf started from. When I started my discoveries, this was where it started from. So I already built the whole thing into a much more structured interface, which I've taught you guys already. So I'm removing this guy from the whole course curriculum actually. The new one will be unveiled today. So that's fine. Now, talking about this guy, if you use indicators, anybody here know about the volume profiler?
Is that the one where you kind of take from A to B and then it just of like a leg and it shows you the volume within that leg? Is that
No,
one?
no, it's not that one. It's the one where you just turn on the indicator and it shows you where the major transactions, where the major volumes were being traded for the day.
Oh, okay.
Okay, so you see how price comes to those levels, mitigates equilibrium in most cases. So like I said, I've taught you guys everything. You see how, because that was where I took out a lot of logic from and I started breaking it into parts. You see how price comes to those levels, mitigates the equilibrium, and then reverses. Okay, sometimes you see how price comes to those levels and respects it in a certain way and then reverses. Sometimes you see how price comes to those levels and then disrespect the levels completely. But most often than not, price tends to respect those levels, especially because what it does, it shows you the volume traded for the entire trading day. It is not fractal in nature. So when you study the behavior of price within these levels, like I said, I'm not teaching it, but I'm just explaining certain things to those of you that love to research. So you can actually research more on it. When you study the behavior of price within these levels that the volume profiler has indicated, you can begin to tell what certain supply and demand level could look like and how price tends to respect it or disrespect it. Does it make sense now?
Yeah.
So all of those things is what I put as a whole, and I taught you guys in demand and supply. Okay, so shall we proceed to Algo market structure? Do you want to take a screenshot? You can now, or wherever it shall be cleaned. Okay, good. Let's go. After Algo market structure, every single person here, I want to start saying your markup in the community. Because you should already start trading. I want to see your markups. The earlier, the better. It's best you start sending in your markups before we start doing the forward testing session. Because you've gotten all of this information, implement it in your own understanding, make the mistakes if you have to. So when we get to the forward testing session, you can begin to see where you falter and you'll be able to correct it immediately, and it helps you to become better quickly. But if you keep waiting for us to finish the forward testing session before you jump on chat, I'm telling you there's a higher possibility of you getting confused. Okay, you've learned a number of things, a number of concepts in the past. So coupled with what you've learned now, put everything into action, unlearn what you need to unlearn. You are relearning what you need to relearn. So put the whole thing into action before our forward testing session. Because in our forward testing sessions, you are going to be blown away. Already, I know I did a little thing with you guys, but you're going to be blown away. And if you're not careful, you can be carried away. Instead of learning from it based off what you've practiced, you are just going to have something that you're excited about. But when you jump on chat, you're confused. Does it make sense, everybody?
Yeah.
Yeah.
Good.
Yusuf, do we just carry on sending them in the October group?
Yeah. It's just continue in the October group.
Yeah.
And
I didn't know if there was going to be another section to post them in.
Yeah, continue the October group. As soon as we finish the final session, I would be moving you guys to a new team. And yeah, you guys will be Team Purple.
Sweet.
Yeah. Antoine bribed me, actually. So, I was okay with the bribe. The guys occupying Team Purple, I chased them away.
Good.
To them, there's been an order from the above. They should go.
Thank you, boss.
All right, guys. Okay. So we've been hearing MSU this, MSU that, MSU this. you've been seeing in the community, somebody would be like, oh, that was not price behavior, that was price delivery, that was not price delivery, that was price behavior, that was this, that was not this. Well, it's time you hear it from the horse's mouth, yeah? So, price. Let's go back to price. And let's go back to all the analogies I've been doing, you guys. Sorry, all the scenarios and all the physical things, yeah? Price. If you pay £5,000 for an item, and you're given an item of that's worth £100, will you be happy? You'll be happy about it? Will you consider that transaction complete? No. Right? Yes. Now, if you don't have £5,000 to pay for an item that is worth £5,000, you can pay for that item on installment till you get to 5,000. True or true?
Yeah.
But if I tell you that these two case studies or scenarios I have indicated, that I've explained, is actually what the market does, will you believe me?
Yeah.
See, yeah, you believe me, of course, because everything I've shown so far, everything I've shown so far has led you to believe in me. So now, price loves moving from city to city. Price loves moving from city to city. You see, if I have a city here, for example, another city here, okay, this is the product, this is the money, 5,000 for this product. For me to get this product here, okay, I'm here, I need to get to this product. I don't have the entire 5,000, okay? I have to start putting the money together gradually till I get here. So in flying from one city to the next city, you have to go through what? Towns. Boom. And the moment you reach this city, where's the next destination? Another city again. And you go through what? Again, you go through the towns. These cities is what? The higher time frame. And the towns is what? The lower time frame. We already understand that, you see, this whole thing I'm explaining here is no longer new to you guys, because you know at this moment that price hates being inefficient and it's always seeking to be efficient. And that is fractal in nature, which means you can find it on the lower time frame as much as you can find it on the higher time frame. So you see, when price lacks inefficiency on the higher time frame, it's always seeking to be efficient on that higher time frame again, city to city. When price leaves a higher time frame supply, it is more than likely going to where a higher time frame demand, city to city. But for price to get to this higher time frame supply and demand, the lower time frame has to deliver price between. That's why we have the internal structure. Does it make sense?
Yep.
Now, that's why you need to understand that when a higher time frame liquidity is taken, where is most likely the next target? A higher time frame target. And what target is it going to be again? It's going to be a higher time frame liquidity target. Is it making sense?
Mm-hmm.
Let me quickly chip in this one a little, just something quick, as quick as possible. Who is laughing now? Now, look at this, for example, 1 hour. You guys, I don't know if it was you guys, but I think it was you guys. Did you remember when we were talking about this demand? I would say this is a higher time frame demand that while we're still watching for those sales that was happening here, that will be waiting to see the opportunity to buy. Is the buy not happening now or not? Yeah. It was you guys I had that session with, right?
Yeah, you said it was coming to that demand level, and you've been saying it for a while.
For buy. Now, the question is this. The first question you ask yourself is this. This buy is happening. Why didn't this buy stop here and continue lower? Why does it keep going higher? Because come again, let me hear you, Azad.
It reached its city destination.
Yeah, it reached all of these are also cities, because this is the 1 hour time frame, but it reached a city that is even bigger than this. Let's say it even reached a country, for example. So it's going to another country. Right? So now, if you move from this time frame, for example, you go to the daily time frame, right here, you see, where is price reacting from here? You see, price is reacting from this demand level here. Is that not a major demand level? Major. So it makes sense, and price left what? This inefficiency here. So it only makes sense because if you look closely, this is a lot of noise. Am I correct?
Yeah.
That means that there is a huge possibility that the demand level it actually turned from is not even the daily. Let's go to the weekly and see if there's less noise. Aha, the weekly has less noise. Am I correct?
Yeah.
On the weekly time frame, price has reacted here. Not only did price react here, it reacted even below the equilibrium pricing, which means chances are when prices come in later, don't expect price to take anything here. There's likely nothing here anymore. To more than likely break it. Do you see how that money is getting transferred?
Yeah.
So now as price comes here, it hits a major city. Where do you think it's going to? The next major city. We don't know what it is, but we're going to play it safe. What we'll do is we'll mark here, which is the hidden supply. And then we also mark here. Type 2 efficiency. Can you now see why price is not stopping? It just keeps going.
Yeah.
And this pattern here indicates that price will still go higher. You get to understand what this is when we get to entries. I'm laughing because of something.
More ways to enter. That's good.
Of course, this is one of my entry pattern actually. It's called the rejection candle. You only find it on valid supply and demand levels. And when it happens, it pushes price. Can you see rejection candle here? Look at rejection candle here. Look at rejection candle here.
Yeah.
Yeah. Just keep looking at it slowly because I won't actually show it and say, oh, this is it. I'm actually flexible with it when I'm teaching. So just keep taking it that way. And you can also ask as many people as possible in community. But there are rules to it anyways. You don't just pick it anyhow. There are rules to it. Okay. So I'll tell you all the rules anyways. Now, we understand why this guy just keeps going. You see, there is no stopping it on the daily. That there is no stopping it on the daily doesn't mean we won't pay attention to all of these daily buy to sell levels. You see now, if I catch a trade here, can you see why I would want to swing this trade at least to this level and this level?
Yeah.
Yeah.
So I hope you guys are beginning to see it gradually that it's not just about intraday trading. It's about the entire market. You can swing if you want to swing. Okay, you can swing if you want to swing. The intentions of price, as you practice, understand it over time, is always very clear. The intentions are always very clear. Okay, more than enough reasons I do have to sell this guy from here. If I was selling this guy from here, for example, this is where I would edge this sell based on this time frame. This is the edge position here. All of these were just, would be the structural interface, or how do I put it? The structural push. Okay, this would just be like the internal structural whatever, but this is the main level to hedge the position. Are you guys seeing the clarity gradually?
Yeah.
Awesome, nice. So having understood this happening at this moment, it happens, it depends on this, it just depends on the story at any particular point in time. So having understood this particular one here at this moment, what do you need to do? You don't need to stress it too much. You don't need to understand it too much. If you go to the lower, the lower time frame and you begin to look, you begin to see clarity. You begin to see clarity. Given this time frame now, the last sell to buy pressure was here. True or true?
Yeah.
Now makes sense why price would want to continue to buy here. Is it making sense? Is it clear? Now, that is the 4 hour. Given the 1 hour time frame, after we understood what is happening there, so we're monitoring to look for a buy there based on the 4 hour. So if you're a swing trader, you follow the story, you can wait a little and then you catch it well. Now, that level, I'm waiting to buy my 4 hour, then boom. On this day, what happened? Price went lower. I like, wait, is this fake VOS inducement? But then it didn't mitigate here to go higher. So, oh shit, I'm not looking into that. But then I know price is already here. So I'm looking for a buy opportunities. And that would enable me to catch some buys here. If you look at this, where is the next city given this time frame? The next city is where? Here. That's the next liquidity level. Am I correct, everybody?
Yeah.
So since I know this is the next city, this push here, do you think that push will just go up straight forward? No, it's going to give me lower time frame, this. And since I understand this higher time frame target, given this 1 hour time frame for intraday purpose, I can now leverage on the lower time frame and catch so many buy opportunities here and catch this entire move. In between, depending on what I see on the higher time frame, on the lower time frame, I'll also consider to hedge my trade somewhere here because this is also efficient, bearish. For intraday trading. Is it making sense now, everybody?
Yep.
When you grab this liquidity, we started looking for sell opportunities, price came there, and then you caught the sell. Yesterday, I was explaining this to Group B, and I told them now that price took out this liquidity, I'll be looking for buys around here. That's what I told them. Exactly. That was when price was still somewhere here. I told them this is because I thought that I was talking about liquidity yesterday with them, but I didn't finish. So I said, this is where I would be looking for the buy. And can you see what happened? Following that higher time frame understanding. So can you guys see what it means by price, at least for now? Can you see have an idea of what it means by price loss moving from city to city? Then in between is what? The towns. So given this time frame, price is here, the next possible liquidity is here. When it grab that, is selling, the next possible liquidity is here. Of course, the structural liquidity, the structural liquidity, the whatever liquidity that could be here, it could be the inducement, could be the transactional. I think I explained that, depends on how price is positioned itself. In this case, what do we have? Inducement, take BOS, inducement, and then price continues higher. Right in this demand level. So you see, it's easy to say, well, Mr. Yusuf, don't we have multiple buy to sell? Why are we not looking at this? Well, do not forget what the higher time frame says. On the higher time frame, this is the entire sell to buy. So we are looking at this demand level based off the 4 hour, not the 1 hour. So we're using the 1 hour to deliver price based off the 4 hour, which means at this point in time, the 4 hour is the external structure and the 1 hour is what? The internal structure. Depending on how price presents itself. All you need to do is reduce the noise and then trade with clarity.
You know, in that demand zone, like, wouldn't you have expected after this fake BOS, like after this fake BOS, wouldn't you have expected it to take this low out, that do an MSU?
Now, first lesson you learn, Anil, never have expectation of price.
Yeah.
Never have expectation of price. Are we together? So now, the question you ask yourself is, where are you in the market? Yeah, you're on the higher time frame supply demand. Am I correct?
Yeah.
Could price go lower? Yes. Could it go higher? Yes. No expectation. What happened here? Price grab liquidity. We'll say possibly inducement liquidity, right? And for that reason, we'll look for a sell opportunity here. Right? Since we are on the higher time frame demand, for that reason, we'll look to hedge that our sell with a buy, anything from this demand level here again. So whichever plays out, this is the 1 hour time frame. You'd have taken partials. Whichever played out will determine what happens. Then this eventually played out. And then at that point, you're like, okay, this city perhaps is now moving to the bigger city. So no expectation whatsoever.
Okay.
There's nothing like I'm expecting here to be induced. No, if it gets induced, fine. You know the levels where liquidity is sitting. So if you only trade it when that liquidity is taken, if it is not taken, you're looking at the next level that liquidity is sitting. That's all. No expectations at all.
Okay. So it's like, if it does that, then that happens. And if it takes that.
Exactly. If it does this, then this happens. If it does this, then this happens. No expectation at all. It's just like a programming language.
Okay. Thank you.
You're welcome.
So I have one question about the liquidity cycle.
Yeah. Ask.
For example, like here, you take transactional liquidity, right?
Where? This
Here.
low?
Now the high.
No, that's at this point here, are we delivering bearish or bullish?
They are bearish.
Bearish. So transactional liquidity can only sit below here. Remember, transactional liquidity, that's why I said, especially for transactional liquidity, I said that is the only liquidity you have to be careful about. Why? Because what you need to understand about transactional liquidity first is by removing the word transactional and see it as liquidity level. That's all. Because it can also become inducement liquidity too, in some cases. But you can't tell until it happens. So what we do is we always assume that it is transactional, but it could also become inducement. So what really matters is that you see it as just a liquidity level.
Yeah.
Does it make sense?
Yeah.
So this is the next transactional liquidity. But when price took out this high, for example, if price proceeds to take out this low, it becomes really, really confusing because this will be fake BOS, this will be inducement. However, this can still remain transactional liquidity too. where since price is still delivering bearish, it can just be for correction to continue lower too. So,
Yeah.
but if you confuse yourself with that, you wouldn't know what to do. So all you just have to do is understand that liquidity was here, it's been taken, and you're looking for a trade. You buy this trade, you edge the trade here, and whatever happens, fine.
Okay. Yeah. Yeah.
You're welcome.
So, for example, sorry.
No problem.
Okay, you take this liquidity, right?
Mm-hmm.
So then, in which part of the cycle you're just like, for example, here you're waiting to take this structural liquidity.
The liquidity cycle comprises of 4 things. Okay, it comprises of 4 components. The first one is efficient price action. The second one is inducement liquidity. The third one is structural liquidity, and the fourth one is what transactional liquidity. Now, here, right now, we are in the liquidity cycle. Boom.
Yeah, inducement.
Inducement. That's what you would say. You see that? Now,
Yeah.
but here is a higher time frame what? Demand level.
Yeah.
Okay. So where you are in the liquidity cycle right now is the 1 hour inducement liquidity. However, on sitting on the weekly demand. 1 hour and weekly, which is superior?
The weekly.
The weekly. So given that instance, what you need to do now is based on that 1 hour time frame, you pay attention to the efficient price action for the buy.
Yeah.
So now, as you pay attention to it, you also pay attention to the liquidity for the buys too. So you catch this one, and boom, when this one comes here, you catch this one, and then you wait. You're allowing price to set out its story better for you on the lower time frame based off that weekly demand level. So the moment price took out this level, it went higher. They're like, okay, let's just keep watching to see what happens. This is transactional liquidity, but let's just see what happens. And more importantly, seeing what happens here, it is best to go to the 4 hour or the daily because of what? This is the what? The weekly. So you build the story slowly downward. You don't just build the story, all of a sudden you saw something on the weekly which is of a stronger bias. Because of how do you know it belongs to the weekly? Because there is less noise in that level on the weekly time frame. Am I communicating now? So you can't just jump from the weekly and then the next thing you're doing is what? The H1. Do you understand what I'm saying now? So the liquidity cycle is based off those 4 things, and those 4 things are on every single time frame. So in combining those time frames, that is the time frame structure analysis. In combining those time frames is now has to do with how you take the whole thing slowly, step by step lower or step by step higher in terms of internal and external structure. Does it make sense now, Nicholas?
Yeah. Thank you, Joseph.
You're welcome, brother. Like now, I say, oh shit, I don't even know what to do now. Here, I have type 2 efficiency, so I'm looking for price to come lower. Here, this noise is too much. Well, what should you do? Don't stress, go higher. Less noise. Aha, this is clear now. So what we need to do is we'll pay attention to this level and then this level. Then we'll see what happens. It's as simple as that. Less noise. Are we together? All of these things I'm talking about now, I'm supposed to talk about them after I teach you guys what we are supposed to do now, algo market structure. But it's okay, as I'm talking about them, I'll teach the algo market structure, and then we'll combine both of them, okay?
Yeah.
Good. So you guys understand city to city now, major to major. Anybody got any other question? So let's say we have here is supply. Here are demand. Major. Then we have price push higher. We have higher high, higher low, higher high, higher low, higher high, higher low, higher high. Break of the structure. So now, with this break of the structure, do I sell here?
No,
No. Why? Why can't I sell there?
it's not took the liquidity.
No liquidity, no inducement, no trade. See? You guys are learning pretty fast. On the first day, if I asked this question, everybody would be like, yeah, we have break of structure, we should be selling from the extreme. Am I correct?
Yeah.
Smart money concept. But now, the story has changed. Can you see that you're actually better than what you thought you were? That is the good thing about the algo way of trading. You don't need to force the unlearning. It just leaves you naturally. Except you are the one forcing yourself to still stick to the unlearning part of it. No liquidity, no trade. Now, price does this. Can I look for a sell now?
Not yet.
Yeah, I can. Let me just leave this guy. Yes, I can. Why? Because I have MSU. Am I correct?
Yeah.
Good. Now, pay close attention. Right here, we will say I have initially what I had was a BOS. But when it took out this high, it became what?
BOS.
And here became what?
Inducement.
Then this is what?
MSU.
Mitigation.
Mitigation.
That's the mitigation there. Okay, so altogether, that's what the MSU. Am I correct?
Yeah.
Manipulation setup. Now, this low, this low to this high, the leg that caused the fake BOS and then led to what the inducement is what we call the valid trading leg. That is what? The valid trading leg. Remember, Azad, you're asking me, would I pick that trade? These are some of the reasons why I will pick that trade. The valid trading leg. What does it mean by valid trading leg? It means any trade you're going to pick has to be within this leg. If it is outside this leg, you don't have a trade anymore. Now, after you have inducement, you have liquidity grab. It means money has been provided for you to transact. You're no longer selling broke or buying broke. Am I correct?
Mm-hmm.
So after you have that, if I have just a mitigation on mitigation, remember what I said about equilibrium, yeah? 50%, 50%, I will be happy to pick that trade. Within my value trading leg. Are we together, please, everybody?
Yes, sir.
Boom,
Okay.
boom. I'll be happy to pick that trade, even multiple entries. And as much as it is within my value trading leg, multiple entries, that is what leveraging on a push is all about. That is the push you're leveraging on. Be price behavior, price delivery, structural and range inducement, everything here, everything is what we are talking about right now. It is taught together, it's not taught separately. Now, within my value trading leg, there are certain type of candles that I might see here that would enable me pick those entries either quickly or later on. Now, I could have, for example, rejection candle, which you get to understand, or engulfing candle, which you also get to understand. If I have this push and then this push, everybody, if price comes back here to mitigate the equilibrium here, can I sell this guy?
No.
Oh, I'm clapping, I'm clapping, I'm clapping. Everybody got the logic now. I like the way you guys unanimously said no. Because we are already saying that it is inefficient above. So you see, even the fact that it is within your valid trading leg, it was not still valid for you to pick that trade. Because of what? Inefficiency.
Price action.
It is inefficient. And the first rule is never trade from inefficient level. So you see, all of this here is your lower time frame. This year is your higher time frame. More or less, this year is your internal structure. This year is your external structure. Now, if price does this and then comes back here, can I sell?
Yes.
Yes.
Will I sell? That's one thing I like about this part, this agro market structure. It puts everything you've learned so far to test. And that's how the market is exactly. Agro market structure is the closest education you could have to the market, combining everything that the market entails. Can I sell? Everybody said yes. Will I sell?
You don't have MSU, but
No what?
you don't have an MSU.
So I won't sell. Even within the value trading leg. Why? Because inefficiency has been left, price has regained efficiency, which means I can sell, but I won't sell except I have an MSU within that leg before I can sell this leg, before I will sell that leg. Is it making sense, everybody now?
Mm-hmm.
That is why you shouldn't have any expectation All you can do is just watch. Yeah, at least just keep listening to the language. Keep listening. And when it says go, of course, quickly you run to the door. Close it. She said go. So what are you waiting for? Close the door.
Just a quick question, Yusuf.
Yeah.
So like the trade that I posted earlier, price obviously did something like this, but it didn't create an MSU. It just did this. And you said that was valid.
Yeah, it was because it grabbed a liquidity. It grabs structural liquidity.
Okay.
Did you see that trade? It grabs. I know the trade you picked. You might not have a full understanding of why it was valid, but look at it. I'm opening the trade now. Let me show you.
Yeah.
Based off, let me just share that screen and show it to you guys.
I think that's where I struggle. I know I would have took the trade, but I don't always know the reasons why.
You see, it grabbed. You see, that was the last low before the main low, nothing more.
Yeah.
It grabbed that structural liquidity, and you see that momentum shift there. Then it came right there. It tested this. Then this guy came right into 50% of that level. So this is indicating that price is changing. And more importantly, if you look at this here, that got to that level too.
So would that have still classed as an MSU because it took that last low?
No, that is not an MSU. That is just a grab of liquidity, structural liquidity. I remember I said I never pick trade directly from structural liquidity. This trade here, you would miss it. You would leave it for now, but later on, you can pick this trade. That's fine. But for now, I will always recommend you leave this and get used to just those trades that has MSU.
Okay. Gotcha.
This trade here is based off money transfer.
Yeah.
And at the moment, I am not adding money transfer trades to your trades yet. I want you guys to just focus majorly on MSU trade, catch that consistency, then I will chip in money transfer with you.
Perfect. Okay.
Is it clear?
Yeah.
Awesome. Awesome. You see this trade from yesterday, very sweet. They say trade is sweet, very, very sweet. Look at, and you still find them today. Fake BOS or fake BOS inducement, then what? Lower time frame. You see that? Fake BOS inducement, lower time frame, textbook setup, next liquidity level, boom, they buy again. Very sweet. That was a trade that Kevin took while I was teaching. Very clean, sweet and clean. Even the buys, fake BOS in this sweet and clean. Well, let's just finish Algo market structure, everybody.
Yusuf, is there a certain amount of pips that the market will take liquidity from? So
no, there's none. Remember, it is fractal in nature, so it doesn't need any amount of pips. It just does what it wants to do. Just a sec, guys. Hold on. Is everybody back?
Yeah.
Yeah, Anil. Can't see Anil. I can't see Nicholas. Okay. Shall we? Or somebody wants to ask any question?
Nope. You can
Honestly, the education's amazing, Yusuf. I'm learning a lot.
Thanks, bro. I appreciate it. Appreciate, man. Sure.
So Yusuf, you only have to wait for an MSU if you, to regain efficiency if the price becomes inefficient inside the valid trading leg.
Yeah.
Okay.
You have to wait for price to regain efficiency. And you have to be really, really careful with that because there is a huge possibility that price could still come back here. So even with it regaining efficiency, it can still fuck you over and come here.
Okay.
Yeah. So, but if that happens, we just put that under good loss.
Okay.
Now, let me just leave it that way. Okay, so let's say price does that and boom, price goes lower. Now, an interesting part too, when price takes out the previous low, it is at this point that we say we have what we call the true POS. The initial was fake, then we have the true POS. Now, after the true BOS, like I told you guys earlier, every trade you have to pick has to be within the valid trading leg. So after the true BOS, can I pick any trade here? No.
No.
Which means we're done with the valid trading leg, right? All we just have to do is to start searching for a new valid trading leg. And a new valid trading leg would not happen if we don't have an MSU. True or true?
True.
Yeah, because that's the new structure point. Yeah, yeah.
Awesome. Awesome. But what if I should tell you guys? What if I tell you guys that there is still one condition that can make you pick a trade from the valid trading leg? Again, even after price has taken out true BOS. Aha, that becomes something entirely new. I'm liking this. So, in this valid trading leg, when price was delivering bearish, okay, let me reduce this guy a little. In this valid trading leg, when price was delivering bearish, there were levels where you had imbalances too.
Mm-hmm.
Right? And those levels are where the sell money are and the buy monies. In this case, sell money. Right? Now, looking at this low, the first sell money that we have in all of this push downward is here. Why is it there? Because that is where you have the next inefficient price action. Somewhere here. Am I correct? Isn't it, everybody? Good.
Yeah.
Then other than this, this is the first. There is no second. So this is what? The last. Are we together?
What do you mean by there's no second, but the last?
There is just two levels with imbalances in this push. So if it is more than one, then we say, oh, this is the first, this is the second, this is the third, this is the last.
Okay.
Okay. So now, this is the first, this is the last sell money. If after the true BOS, price makes a direct pullback to the last sell money, you can sell this guy directly. Within that value trading leg, if after the true BOS, price makes a direct pullback into the last sell money, you can sell it. And vice versa. If it's a buy, into the last buy money. Now, the question is, what is a direct pullback? I just showed you guys one something now. That is a direct pullback. But truly, what is a direct pullback? Because it can be confusing too. You see, after you have price making true BOS, if price does something like this, can you see that this is a new structural point? Shallow, right? Isn't it?
Yeah.
But is that external or internal? Everybody.
External.
External. Thank you. It doesn't matter if it is shallow or not. What matters is it is happening outside this structural point. So if you have a new structural point, structural levels created already before price comes to this level, you want to be careful. That is not a direct pullback anymore. If you have price doing this, this is not direct pullback anymore. A direct pullback is only when after the true BOS, price begins to go back. Even if it does something like this and gets here, that is still a direct pullback. And as much as a new structural low was not created after this low that broke this structure. Do you understand, everybody? Good. So even a direct pullback can also look like this.
Is it wrong to say, okay, a direct pullback would be if the pullback happens within the external level, the external points, structure points?
Well, I'm not sure I understand what you mean by that, though.
Let me quick annotate. Okay, so we have the true BOS, right?
Mm-hmm.
Now, if price has the pullback and it goes within this line here, would that be considered direct? I mean, does it have to happen within the
direct pullback
point?
Is only considered a direct pullback if it doesn't create multiple structural points here and if it comes to the last sell money.
Okay.
If it's stopping anywhere here, we are not interested in that trade. So we don't consider any, it's a direct pullback, but it's not our trade. It has to be into the last sell money.
All right.
So it's coming back here, for example, is just regaining efficiency, that's all. We don't have a trade there. So the only condition for you to pick a trade again from the valid trading leg is if it is a direct pullback to the last sell money. Is it clear, everybody? Then you can sell this guy directly. You don't need to wait for MSU before you sell. But if you have MSU, that's fine. Price will just do its thing. So your own is just to capitalize on it.
Mm-hmm.
So you guys know what a valid trading leg is now, right?
Yes.
Good. Because I'm going to remove this guy. Now, you have stuff like this. Everybody. Has liquidity been taken here? If I ask you guys now, okay, has liquidity been taken here? True or true? No, yes or no?
Yes.
You see, do not forget that even in the process of the direct pullback, even in the process of the direct pullback, you could still have price do this. You see that? And you catch the buy. That's how ping pong. Then it comes here, you catch the sell again. Like, what the heck? Ping pong in the market like nothing? That's how it happens, man. So now, the next sell money, the next liquidity level, you ask yourself 4 questions. Where's the next EPA? Bam, bam, bam. Where's the next inducement liquidity? Where's the next structural liquidity? Okay. Where's the next transactional liquidity? These 4 are the only levels I'm interested in picking a trade from. If I can't find a trade within any of these levels, I'm not interested in a trade. Does it make sense?
Mm-hmm.
Good. So now, everybody, do I have a liquidity here? Yes or no?
Yeah.
Yeah. It's taken.
What liquidity do I have here?
Transactional.
What is it?
No.
Transactional.
Transactional.
Transactional, right?
Yeah.
Good. So you see, was there a liquidity here initially?
Yeah.
What liquidity was that? Structure. But fortunately, price took this. So I know now I'm expecting a buy, right? I know a buy is coming. I'm saying this, but I know a buy is coming, isn't it? Then when I look up again, what do I have? Ask yourself, where's the next EPA? Obviously, it is here. This ones are taken. So now let's start with the question. Where's the next EPA? It is here, isn't it?
Yeah.
When price comes back now, they will say, oh, it's efficient. So anything, once price gets here, I can start looking for a trade based off MSU to sell. Am I correct? Where's the next structural liquidity? Where is the next inducement liquidity? Everybody? Can you annotate on the screen? Let me see. Nick marked somewhere. Antoine, Anil. Others. Is everybody marking? Awesome. So where is the next Aha, that's why I needed everybody to mark. Dev, why did you mark this?
So that might be an inducement as well.
Aha, you see what I'm saying? That's why I needed everybody to mark this.
Because this price is inefficient here.
This you marked is a liquidity level. See that? It is a liquidity level.
Mm.
However, price, this is not an external structure. Is it? It is not, right?
Yep.
It is internal. Had it been when price was here, it hadn't taken out this high, I'll be looking at here as my next inducement liquidity.
Gotcha.
Do you understand? But the moment price took out this low right here, my next inducement liquidity is now here, because this is the external high, external low. These are all internal push or substructures. Do you get the point now? So now, does it mean that there is no liquidity here? No, it doesn't mean. It means there is still liquidity here. Remember when we talked about liquidity, we said it's sitting on every highs and every lows in the market. If price comes now to this level, I won't sell this and say this is inducement. No, I would watch what happens afterwards to determine if I would sell or not. Do you understand?
Gotcha.
But preferably, the next level of liquidity that we're going to pay attention to is what? The inducement liquidity, which is here. After we paid attention to the EPA here, the next one is what? The inducement liquidity here. Then everybody, after that, the next one is what? Structural liquidity. Can you mark the structural liquidity, the next available structural liquidity here? Thank you. Right there. Does it make sense now? Gog, Dev, right? Good.
Yep, sure does.
Now, so if price comes here next, we say it grab what? Structural liquidity. Do we sell? Do we execute this trade from there? Everybody, do we?
Should wait for an MSU.
We wait for an MSU. You know liquidity has been taken, but you have to wait for an MSU before you can sell that. Why? Because price can just take out, can do this before it drops. Do you understand?
Yeah.
Price can induce that high before it drops. Are we together? Is it making sense, everybody?
Yep.
Now, but but the thing is this: I can actually sell from here directly. Somebody asked me why. Nobody's asking me why can I sell here directly.
It's already took lots of liquidity.
Now, the reason why I could actually sell here directly is two. The first reason is that I know that price had already become efficient here in terms of equilibrium pricing. So it might not take out this high. That is the first reason. The second reason is I probably am already in the buy trade here after I knew liquidity was taken. So this buy, I'm just trying to hedge it with this sell here, knowing that liquidity has been taken. Do you see that logic now?
Yeah.
Those are the two reasons that could make me sell directly. So you see, we are not selling the structural liquidity directly. We're selling based on understanding of transfer of money and the liquidity there. Does it make sense?
Yeah.
So if price, let's do all of these guys. So you guys, can you see how I follow the market now in terms of liquidity and APA? You can see how my mind reads the market step by step. That's how it goes continuously every time. Now, let's say price goes up and I did that, took that liquidity, and then started to go down. As this sell is going, are we in a downtrend or we're in an uptrend?
In a downtrend.
Downtrend.
In a downtrend. Okay, we are in a downtrend. Now, let's say as price pushed lower, where is the next liquidity? Good. Downtrend, potentially, price will more than likely take out the low, the main low, true or true?
Yeah.
But that does not mean we'll not pay attention to whatever it is that would happen here. Can you guys see how it works? Liquidity for entry, liquidity for exit. Is it making sense? Thank you. Now, that could happen. So let's say this was what happened. Boom. Price took out this high. Do we have an MSC or not? We do, right?
Yeah, you got
big BOS inducement. Can you see all the substructure we didn't allow ourselves get distracted with? Very important. Now, another thing to note is, did you guys notice fake BOS inducement for the buy? And here to here is the value trading leg. A direct pullback will mean that price came here directly and then you want to buy. Am I correct?
Mm-hmm.
Good. Now that you know that I'm correct, let me give you guys the rule to direct pullback. A direct pullback is only picked in the direction of the trend. If your trend is an uptrend as identified by you, depending on how you build your story, a direct pullback that is going to continue bullish, you can pick it. However, a direct pullback that is going to continue bearish, never pick it. If it plays out, fine, it played out. What I'm saying is this: we have an uptrend. For example, I have a direct pullback. I'll pick this guy for the buy. We are still in an uptrend. I have a supply level. We're seeing an uptrend. I have a direct pullback for the buy, but it kicked me out. Now I have a direct pullback for the sell because what? That was fake POS, that was inducement, and this is direct pullback for the sell. Never pick this. Why? Because we are in an uptrend. Chances are it could do this. Now, that's why it's important to understand what time frame you are currently trading. In this case, can I pick this direct pullback for the buy? Yes, I can, because I know liquidity has been taken. We are currently delivering bullish. given this time frame, that lower time frame, this direct pullback belongs to that lower time frame to deliver bullish. So the trend at this moment temporarily is what? A bullish trend on that lower time frame, maybe the 1 minute. I don't expect this trade to keep going, because that means I'm now playing this higher time frame thing with it. Does it make sense?
Yeah.
Good. Oof. We're almost done. Those are all the major rules. We're almost done. We're almost done. Now, I have again right here, fake BOS inducement. Is this a downtrend or an uptrend? A downtrend, right?
Yep.
Yeah.
So we can pick that mitigation, right, everybody? Now, you see, in this case here, it will make sense if this is an order block, for example, it actually makes sense if I put my fib and I drop 50%, because price didn't get to equilibrium. It's possible price turns from equilibrium here and drop. After all, price smashed equilibrium here, so possibly no money above it again. Can you guys see how transfer of money is working there?
Yeah.
Now, if you look closely, you would see that this was a supply. And this supply right here, before price smashed got into this supply, we also had what we refer to as fake BOS and inducement and mitigation here for the buy. That was the same MSU that caused this buy is the same MSU that caused this sell. True or true?
True.
Are we together?
Yeah.
So you see, but one thing is that same MSU, one of them happened into the demand or on the into the supply or on the supply here. This one is right. It happened right on the supply because price already tapped the supply, right? Then one happened away from. So we can say it's happened on the supply, and it can also happen into the supply, whereby the mitigation is what hits the supply. Do you understand? That one is into the supply. Then we now have it again away from supply. So that is where we have price behavior and price delivery. You see, price behavior, they are both MSU, okay? Price behavior PB is PB into or on supply / demand. That's where we say there is a price behavior. But price delivery, which is PB, is away from supply or demand. Does it make sense, everybody? So that's our way of differentiating it to make the analysis and explanation different. Sorry, explanation, yeah, easy and different.
Yusuf, can you just go over that one more time? Because I'm like lost.
Okay, I'm coming.
Just about that price behavior. So
Price, look at this. Hold on. Look at this. I'll draw something new. You see, in a downtrend, for example, you have lower low, lower high, lower low, lower high, lower low. Can you sell? If price comes here, it's efficient, right? So can you sell here?
Yep.
yeah.
Yes, you can. Now, the MSU, let's say price, let me use another color. Let's say price continues higher like this. The MSU, can you see this? That you get fake BOS inducement into this supply is referred to as price behavior into the supply.
Oh, yeah.
But the MSU that you get away from this supply is called price delivery away from supply.
Yeah, that makes more sense. Yeah.
Is it clear, everybody?
Yep.
So that's what it means. You might want to just take a screenshot in between. I know I clean some, I leave some. So you want to take a screenshot in between and then. So in this case, this is this particular MSU that went into this supply. Here, this is price behavior. This is price delivery. This one, fake BOS inducement. Here is price delivery away from this demand. And that same MSU that gave us that price delivery away from this demand is still the same MSU that gave us fake BOS inducement, price behavior into this supply.
Will that MSU, like the price delivery, always happen? Or no?
What is it? Look at this MSU here. This particular guy here. Can you see it? This particular guy gave us fake POS inducement mitigation here for us to buy. And it was still that same guy, that same structural level that gave us fake POS inducement mitigation here for us to consider selling again. So when it is created for us to consider selling from this supply, it is called price behavior into supply or on supply if it's already on the supply. But when it is delivering away, in this case, you can see price is delivering away from here, isn't it? So when it is delivering away and you have MSU, that is price delivery away from supply, away from demand rather, yeah, in this case. Is anybody still unclear? I can still show more examples, don't worry. Just let me know.
Understood.
Understood, okay. Everybody understood?
Yeah.
Awesome. That's why the reason we need to separate both of them is because this guy alone can really be conflicting. When you get there, it's twisting your head, but no, once you can tell which is which, then that's fine. You know how to manage it. Nice. Let's continue. Sorry, I'm cleaning some stuff. I just like keeping the chat clean. So you see, when price mitigates, for example, goes like that, is this a valid trading leg or not? Are we in a valid trading leg or not?
From here to there?
Exactly. We're in a valid trading leg. So you see, price does this, for example, boom. Do you sell?
Yep.
Yeah.
Yeah.
Absolutely. Now, you sold this guy, price does this, and then price does this. Do you sell again? Hazard, you're muted. You're saying something, but you're muted.
Sorry. That's created a new leg. So no, do you wait for another MSU?
No, you don't wait for new MSU. You don't.
Oh, okay.
You had a valid trading leg. It's a downtrend. You had MSU here that made you sell here. Then you had true BOS, and then you had direct pullback to the last sell money. Then you sell again.
Okay. Yeah.
The market is very stupid, honestly speaking. That's how it does. You see why I was saying you don't want to be trading for long hours. Just make your money and get out. Except you just want to wait and swing trade, then you wait, pick your trade, and then forget about it too. So that's fine.
Yusuf, do you ever hold kind of your full margin on a swing, or is it more just partials? If you
I don't swing, unfortunately.
Okay.
Yeah, I'm okay with I believe in compound interest, so I'm okay with compounding my account every time I trade. Then
yeah, makes sense.
But if I want to swing, I'm going to hold full margin.
Okay.
Yeah, I'll just hold it to the next higher time frame liquidity level, depending on how I see the cycle for that time frame. But for intraday trading, irrespective of the liquidity cycle, I don't hold full margin to the next liquidity cycle for intraday trading. I take 80% volume off at 12 pips to 15 pips. That's how I do my plan. Then I can now hold the remaining volume to the next liquidity cycle and I look for my next trade. Reason for this is because I use fixed lots. So on the average, when I take 80% off, there's a huge possibility that that trade has given me 10% of my account.
Did you say 12 to 15%?
Yeah, 12 to 15 pips.
12 to 15 pips, yeah.
So at that stage, I would have made like 7%, 8%, 9% of my account, 10% of my account. So I picked 2-3 trades. I'm already tired because the percentage is enough.
So do you not adjust your stop loss? Is it always 2 pips, or do you adjust it 1.5?
It depends on the market. It depends on what trade it is. That's just it. And sometimes when the market is volatile, you can't even use 2 pips stop loss. When the market is volatile, sometimes the average stop loss is going to be 2 pips. It's going to be ranging between 2.5 pips, 2 pips, 2.8 pips, 1.5 pips. Sometimes when the market is not volatile, you see it's going to be ranging between 1.5 pips, 1 pip, 1.8 pips thereabout. So you have to be careful when you have fixed pips for your stop loss. When the market is volatile, you might not get trades. And what I mean by when the market is volatile, you see the trade, it gives you 2.5 pips stop loss. You don't pick it. The average move that you normally do could be like 15, 20 pips. And that particular move that gives you 2.5 pips stop loss could do like 40 pips, 38 pips.
Right.
You understand? So you have, like, lately, EU has been like that. There was a time it was like that too, also. So I know when those things are happening and I adapt accordingly. But when it is not volatile, my average stop loss is 1.5 pip, max 2 pips.
But you said you don't adjust your lot size according to 1.5 or 2.
I don't care. Yeah, I don't care the stop loss. I just use fixed lots.
Okay.
Yeah, I don't care the stop loss. I just use fixed lots. And my stop loss are usually not more than 2 pips.
Okay. So if we just
in most cases, my stop loss are usually not more than 2 pips. So if it gets to 2.5 pip, that's fine. Still the same stop loss I'm going to use. But if I use 2.5 pip, that means we are in a volatile market.
Okay.
So if I use 10 standard lot per 10K account. So if I thought the account goes to 9K, I still use 10 standard lot. If it goes to 8K, I still use 10 standard lot. If it goes to 12K, I still use 10 standard lot. If it goes to 18K, I still use 10 standard lots. I don't increase it until it gets to 20K. Then we start with 20 standard lots.
At some point during boot camp, before it's over, do you go over the benefits of standard lots versus a percentage of your account size?
Come again?
Will you be talking about trade entries as far as the benefits of using standard lot versus a percentage of your account? Like people always say
no, not during boot camp. I've done that before in a community course. So at some point in the community course, I'll talk about that.
Okay.
Trade management and all of that, tricks management. So those comes in community course, not in boot camp.
All right.
And we're going to have a lot of that in December, actually.
Great.
I finally take a break for the year.
Perfect. Yusuf, are we doing 2 sessions today, or is it all together in one go? Or
no, Algo market structure takes more or less 1 session, but that's why I'm digressing, so we can have all the time to ourselves. And we are launching our website today, so I have to get back to work. The IT guys are really at work here, and we have to just make sure everything is in proper shape. So
yeah,
we'll be wrapping up the bootcamp by Thursday. So we'll be starting by 11. Oh shit, I mixed that. Okay, we'll be starting by, please allow me to confirm. We're going to start either 11 a.m. UK time or 12 p.m. UK time.
On Thursday?
Yeah, on Thursday. I hope that's okay by you guys.
Yeah, fine by me.
Okay, so because it's going to be both groups together, Group A and Group B.
Again, on Thursday, is it 2 different sessions or is it all together?
No, it's just 1 session.
Okay.
Yeah, you see, the way the curriculum is built, the first part of the curriculum, which is the basic, takes 2 sessions to complete. The second part takes 2 sessions to complete. The third and the fourth part takes just 1 session to complete. So that's why I say I'm taking it slow. So the 1 session can be more than 2 hours. It doesn't have to be 2. I don't want it to be 2 hours. I want us to really flow with each other. So that's why I say I'm digressing and explaining stuff. To stick to the time strictly, I would have been done since. Okay, so now that goes there. Sometimes, let me add this. Sometimes the price will just come to this structural liquidity, gives you a trade, comes here, you try to hedge the trade, it gives you price behavior into supply, you sell, and then it goes down, then it does something like this again, and then it goes down. And that's how you see somebody getting in here and there, here and there. So it catches this buy here, sold here, sold here, sold here, bought here, sorry, bought here, sold here again. Like, damn, this guy is good, but that's the secret, man. Algo market structure, the algorithmic delivery of the market. As you follow it, you see the efficiency. If you notice what I'm doing, it's not being stupid. It's price. You're getting efficiency, mitigating efficiency. Can you see that? Price does that. And somebody will be so focused on this level here. Oh shit, it didn't come. Next time. Don't worry, your POI is coming. And it's still waiting with his limit order. And oh, fucked. So shit happens.
I've seen so many traders like that where they'll just mark that POI, go away from the charts, and they'll just set an alert. And by the time it's got there and it just doesn't do what they want to, and then they get demotivated because their trade didn't work out that they've been waiting for so long.
Yeah.
Cycle of
It's crazy, man. It'll be fine. Now, it continues when you take here at least a transactional liquidity taking, and it is fractal in nature. You just begin to separate the structures and all of that. If you look at this now, you could tell that all of this noise, you could still tell what the substructure is and everything, and you could just get a nice understanding of it. So you see, somebody might make the mistake and say, this is fake BOS, this is inducement. No, it is not, because price took out this. This is just a level with liquidity that price can take. That price can take and then deliver. It could happen. So pay attention to it, but that's not inducement liquidity, quote and unquote. Okay. And this guy can continue like that. We test this low, go lower, could still come, grab this liquidity without testing this guy, and go lower. And for example, let's say this happens here. Now, will anybody consider buying?
You need EPA and MSU.
No, there's already an MSU, isn't there?
Oh, it's
So you would buy.
Yeah, see that's how it goes, man. For everybody. Gradually.
For a PD.
Yeah, exactly. Can you see that fake BOS inducement? There was the price behavior into this demand.
Yeah. PB into demand and then PD away from demand.
Yeah. So the cycle goes again. That level of nesting efficiency is here. So you pay attention closely here or whatever it is that could happen again. And price could go all the way here, still pushed all the way down, take out structural liquidity. It might want to go up, then it does this again. Algo market structure.
Yusuf, when I was doing a drawing, you said that this, I just wanted to show this marking here. What would this be classed as? What kind of liquidity, this middle section here?
It is inducement liquidity.
That will be inducement.
Yeah, it's inducement.
Even inside kind of like a substructure.
Yeah, it's inducement. It is sitting within this. It is only when this takes this out that we'll be careful about this. It's no longer inducement. The inducement is down here.
All right. Okay.
So this is just a low with liquidity.
So I was getting confused with that markup I did. You know, the one that you said that wasn't.
Yeah, I know. Everybody, that's everything about structural algo market structure. And when you talk about structure and range inducement, I added it in the earlier part. This is the first curriculum I use in teaching. So that has to do with the structural liquidity actually, and the entire range. So you mark the entire range here, and then you pay attention to the structural liquidity. So that's what it is all about. So I already taught you guys in liquidity. And lastly, last but not the least, don't forget that, let me write this down. When it is complex, what do you do? Everybody, go higher.
What is complex?
When price action is complex, you go higher.
Not clear.
When it's confusing or what?
Yeah, exactly. When it is confusing, when it is complex, when it's a lot of noise.
Okay. Sorry.
Let me put into brackets. Yeah, noisy, confusing.
If it's not clear.
Unclear.
I've seen a mark on someone's chart that says simple inducement and complex inducement, or whatever it was. I think it was.
Yeah, it's telling you that it is complex.
Okay.
What the person is saying is this. Let me draw it to you. That's what I was going to draw next. It's telling you that, okay, so my 5 minutes inducement could be fake BOS inducement and then drop. That's simple, right? But when my 5 minute looks like this, and then I have this. This is complex, isn't it? However, this that is complex, when I switch to my 15 minutes, it looks like this.
Understood. Gotcha.
You understand? So it's telling you, it's just showing you, when it shows you this chart on 5 minute time frame, it's telling that, oh, this was a complex inducement, telling it doesn't belong to this time frame, but a time frame much higher. So that is what you say. When it is complex, it's confusing, just go higher where the noise is less, and then you get a better picture of price. All right. If you don't understand it, just leave it. Don't trade it.
And if
one trade is good enough for the day, you make 5%, 10%, you'll be fine.
If you are going up higher, are you going in 5? So 5 minutes to 15, or 5 minutes to 15 minute? Or 15,
yeah.
Or are you going up 5 minutes to 10 minutes? Or whichever.
No 10 minutes. Remember when we treated internal and external structure, I never mentioned 10 minutes. Only those time frames that I mentioned that I use.
Yeah. So if it's complex,
no 10 minutes.
Next,
yeah. If 5 minutes is complex, go to 15. 15 minutes is complex, go to 1 hour. 1 hour is complex, go to 4 hours. 4 hours is complex, go to daily. Daily is complex, go to weekly.
Yeah, makes sense. Thank you.
One minute is always complex, so don't even bother. Just use it for your entries. Majorly.
Hello?
Yeah.
The wicked echo.
I know, right? My headphone was low. I didn't charge it, so it died just now. So I had to join with my iPad.
Okay.
And use the iPad audio so that we can hear me clearly. All right. So anybody got any question?
Oh, actually, Yusuf, in terms of versus the trading plan, is that going to come after next Thursday session? Would you say the full plan?
Yeah, the trading plan is more or less the first thing we're going to do on Thursday. Then we're going to apply that trading plan in combining everything we've learned.
Breaking up again, Yusuf.
I'm breaking up.
Yeah. Okay. Yeah, you're back
Is
now.
it better now? It's better now, yeah?
Yeah.
Habib posted a question in the chat. Did you see it?
Yeah, Habib, your network was bad when I was talking about it. So the best I can do is I'll let you know when I'm having the session with Group B. I haven't talked about that, so you join them and get that information from them, because I have other things I have to quickly attend to now, actually. So don't worry, I'll let you know, okay? As for the training plan, as I said, that's the first thing we're going to tackle on Thursday. Then we're going to now build everything around it for the top-down analysis and combining everything together.
Yeah. I was more thinking, just because you said to post some markups into the group. It'd probably help if we had like the structure. That was all.
Yeah. So like I said before, all you need to do for now in terms of trading plan is go to the Discord community. Come to rules and then follow this.
Okay.
Follow everything here for now, because that's basically what I'm going to be talking about too.
Yeah. Okay.
Okay. So you can view the images and then see. Why is it opening like that? Anyways.
You just need to click on open original.
Yeah, I'm coming. It's opening actually, but I don't like the. Okay, that's better. See my screen here?
Yep.
So you see where, which is where are you? In between H1 structural liquidity, delivering bearish. What do you see? 5-minute MSU delivering bearish. Then here, this is the first trade where in between H1 structure, yeah, that's the same thing there. What? 5-minute delivering bearish entry, M1, entry on M1 for L5 structural liquidity, target next H1 structural liquidity and H4 demand. You see that? Where, the what, the how, and then your target. Now, this is a bigger picture of it. Can you guys see it now?
Yeah.
Is it clear? Look at how price took out equilibrium, equilibrium, and here it just drops. Find it hard to take out this guy. Look at our price, we didn't take out equilibrium here. And what? We took it here. And after that, we drop. Crazy, right? You see,